G'day folks, welcome back to another update on high-grade copper and US crude oil. After the last update, we did say there was a very slight chance of a bullish break, but it actually turned down, giving us now a bearish break to the downside with divergence. Before we go any further, make sure you hit that like and subscribe button to support the channel. That'd be greatly appreciated. Looking at some the outlook for both crude and copper. For crude oil prices have recently declined to around $70 per barrel, influenced by demand concerns stemming from weak economic data from China and investor caution ahead of the Federal Reserve interest rate decision. The Energy Information Administration forecasts a decrease in net crude oil imports by 20% in 2025, reaching the lowest levels since 1971, due to increased domestic production and reduced refinery demand. For copper, demand remains robust, driven by essential role in electric vehicles, renewable energy and digital infrastructure. Analysts project prices to range higher in the coming months, potentially reaching new records in the later half of 2025. So first looking at high-grade copper, and we always start with the higher time frame trends. So we've got here the monthly, the weekly and the daily. So on the monthly, we've got these, the CCI 150 has broken just a fresh breakout to the downside of that moving average range. But the price is still above that moving average. So again, I'd like to see this break a lot lower to be more bearish, but at the moment it looks bearish in the coming months possibly. And for those new to the channel, we do have these indicators, these moving averages in the description below for that video. So go reference it and view it after this video. On the weekly, that's also a bearish outlook with a turn of the CCI turning down as well. And that's also the price is below its moving averages, giving us a bearish momentum. And that's been that way since early November actually. If I zoom out, you'll notice here we did have I do track these bearish divergence. We had a lower highs on the CCI back here versus higher highs, and the price fell off and it hit that 23-38% minimum range. And in this case, if I was to draw a Fibonacci retracement, that sort of indicate I've marked it with this rectangle. That's at 23-38% minimum retrace. In this case, it fell just touched that 61% and bounced out of there and then consolidated sideways, and we're currently sitting around that 23% Fibonacci range at the moment. So we always mark that, but at the moment the weekly is in a bearish outlook. There's no divergence currently on the weekly. On the daily, we did have this bullish divergence, higher lows versus a double bottom on the price. That's a bullish divergence, and I've marked that there as well with a 23-38% retrace. Hit that. And this one actually went beyond that 23% and actually bounced down from that 50% retrace, and currently it's now below that 23%. As I said, it's retracing and getting weaker as well, with the price and the CCI below their respective moving averages. If we go to the intraday, we always trade in the direction of a higher time frame. So again, if you're trading on the 1 hour, and you can interchange this with your respective time frame, whether it's 2 hours, 4 hours, etc. I'm demonstrating here the 1 hour. So you can see here with in alignment with the daily bearish trend, we only take short trades. And you can see here there would have been some nice little trades to take. I like to take the exits when the CCI breaks into the moving average range, and then re-enter it when it breaks below again. So you would have had a few trades in that little range there. Again, closing out there, another fresh entry there, and then closing it out. And you can see there the CCI gives you an early exit rather than waiting for it to touch the moving average of the price. So in that little range, you would have entered it when that candle broke below. Actually, it would have been on that one there. And you exit it when the CCI touches that moving average range near the bottom there. At the moment, the CCI is moving higher. So you would have exited and wait for it to break below again if you're going short. So avoid going long or short at the moment, but predominantly we'll be going short in alignment with the daily trend. For US crude, on the monthly, it's been bearish now for a number of months on both the price and the CCI. On the weekly, that's also, in fact, that's actually neutral. It's broken into that moving average range, hasn't quite broken higher than that moving average, but notice the price is still below its moving averages. So again, just cautious, avoid going long or short on the daily if you're trading on the daily. And if we zoom out, you'll notice here we did have a very narrow bearish divergence versus higher highs on the price. And a lot of these narrow divergence actually a lot more volatile in terms of their price action. So you can see there it actually fell off, and this one actually came down quite a bit in those weeks if you're following that divergence. That's on the weekly. On the daily, you can see here we're bouncing off this major support at 66.54. We did have a very slight bullish divergence here versus a double bottom on the price. And that actually broke up, hit our minimum target range here at 23.38% level. And it's actually now still consolidating in that range there. But at the moment, you'll notice the CCI is just about to touch that moving average range, giving us potentially a neutral signal. Just wait off a bit before we get more confirmation of a move to the upside. Otherwise, this will break to the downside. Now, if we go to the intraday chart, the 1 hour chart, we did say in the last video back here, it was breaking higher. And you can see there, that actually just touched that moving average range. And then it started breaking to the downside, even though the daily's still in an uptrend. So avoid going long or short at the moment. Well, predominantly long actually, because it's still bullish on the daily. But avoid going short. And you can see there, you would have gone long there. And again, exit when the price breaks into that moving average range. The first exit would have been there, a small gain. Enter it again on that candle. And again, another exit when the CCI touches that range up there near the top there. So that would have been a nice little trade, and avoid going long or short at the moment. That would have been a false break. So if you want to put in stops that you would have got out when it hit that moving average range. And again, another break to the upside there as well. Again, I'd like to see it break higher on the price chart as well to be more confident. So just be cautious of this one. This might actually be a false break and break further to the downside. Again, I'd wait for it to break higher there. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.